Alright, what's up everybody? We're back for another stock market recap. We're going to be covering the last week of April 27th through May 1st. Last week's video, I talked about how traders usually sell in May and they go away. That's usually the theme around this time of year, where traders will sell their holdings, go on summer vacation, and then not return until August, September, and that's when you start seeing buying occurring again. So I said last week that we're going to see a sell-off. We will see a sell-off in May. Well, there was a bit of a sell-off on May 1st, and April 30th, the last day of the month, there was also a bit of a sell-off as well. So if we take a look, there we go. So Thursday it kind of peaked out at around 296 area, and also last week I talked about how 292, 293 would be a resistance zone, and then once it hit the 61.8% Fibonacci retracement, it could start heading back down. Well, in fact, it did that. It hovered around this area. It actually hit the 296 peak in after hours trading. But if you look at the regular trading day, it got to around 295, and then it opened lower at 290. So 292, 293 zone is in fact a resistance area. So a lot of traders did see that, and then there was a sell-off. So everyone's looking at the same things I am. All right. So we did get a huge sell-off last week, and this is Friday, and it ended lower. Again, if you're a momentum trader, again, if you short on weakness, okay, you cover here, right? You make your profit. You make a little bit of profit. Here again, traditional trading methodology is that if it closes weak, you short into weakness, because the chances of you making a profit the very next morning are very high. Okay, it could turn, if you bought strength here, you lost money here, but that's part of trading. You're gonna have losses. You can't have 100% winners. That's why you trade based on percentage win. So you want at least a 75% win every time. So here you're gonna lose, but here you're gonna win. And if here you win again, you're still making more money than you're making money more than you're losing money. So some days you're gonna be losing money, but if you have more winners than losers, it'll offset. Nobody is a 100% winner. Nobody can guess moves like this where it's super weak, you sell here and then it opens up higher, and then you can't predict these types of moves. All right, you have to be a contrarian, and a lot of contrarians, they lose money. I mean, look, if you're shorting here, it opens higher. You short here, it opens higher. You see, you're gonna lose more often than not. You have to go with the momentum. You have to go with the flow. So again, here you could buy, but then it's going to open lower, you lose your money, right? So here on weakness, you short, you make money. You short here, it may open down here and retrace. It might hit this support level right here at the 50% Fibonacci retracement and then bounce higher. So here you still do have a chance to make some money. So that's the area I'm looking at. I am actually not short this market. I'm actually a bull right now. I flipped my position just because this market was very strong for the past month and a half. So I've you gotta flip. You gotta change your sentiment. Okay, the bears had their chance right here all the way down to here. Bearish, good. But when the Fed and the government stepped in and gave everyone clarity in regards to the economy, and with $6 trillion of stimulus, it made the market go higher. Everyone's is confident that businesses won't shut down, they won't go out of business, blah blah blah, and so the market recovered. People started buying back in slowly, and now it's pretty bullish. Again, we're still in an uptrend. Let's draw a line. Let's draw a trend line. Go like this. Okay, so we are below the trend line right now. So this is kind of a shaky situation. Last week I did say don't trade this week. So on Friday when I made the video, I said next week, we're hovering around this area. I wouldn't be trading anything. If you bought on Monday, you would have ended up exactly on Friday. You would end up exactly the same situation. All right. So what is this? Monday was the 27th, right? Here's Monday. Oh, you're actually lower than Monday. See? You can't trade this market. You have to wait until it hits certain support and resistance areas. So here, when it hits here, I would actually be buying right here. When it hits the 50% retracement area, I'd actually be a bull and buy this drop here. And if it closes higher, I'll be more confident that it'll come back up. Okay, so for Monday, I'll wait for this to sell off because people are going to be super bearish. Warren Buffett, the fourth richest man in the world, he sold all of his holdings in the airlines because he said that the future for the airlines doesn't look good. Less people are going to be flying. There's too many airplanes, and he has liquidated all of his airline positions, which is a bad thing. Okay, so the airlines are gonna get hammered on Monday. Okay, that might actually push the market down, probably down to about here, 273 area. If not, I mean, the 38.2% Fibonacci retracement area is a strong support level because it bounced off of here, broke through, bounced off of here. So this 38.2% retracement is a good area. So if on Monday, if it holds the 50% retracement, I am going to buy, especially if it closes up. Okay, I'm gonna buy and I'm gonna sell it on Tuesday up here, Cinco de Mayo. If the market closes weaker, if it drops past the 50% and it hangs out below it, I will short the market and I will buy it down here at the 38.2% Fibonacci retracement. Okay, so that's the trend. If people start liquidating their airline positions, it's going to drag the whole market down with it. Okay, let's take a look. I think American Airlines actually, this is Alcoa. American Airlines actually had, I think I read somewhere where they lowered the price tag to $1. Yeah, here it is. Evercore, okay, maintains American Airlines Group with the underperform and lowers their price target from $10 to $1. Okay, they're saying this is going to be a penny stock. Look at this thing. Let's see the history. Let's go back 10 years. Okay, this thing usually floats around $55 to $25 a share. Okay, it's all up in here. Okay, wild. Let's go back deeper. Let's go 20 years. Holy smokes, this is 20 years. Okay, so this thing, they're saying this thing's going to go bankrupt, basically. Let's take a look at Southwest. This thing has gone down to $5 a share. It hovered around 15 for the longest time. Yeah, so this thing probably dropped back down to 15 before it finds some support. So I would stay away from the airlines for now. Okay, if you're going to buy the airlines, buy it when it's below $10. So yeah, I wouldn't be touching airlines right now unless you're short. Tesla. Let's take a look at Tesla. Elon Musk tweeted that his stock price on Tesla was too high. He tweeted that himself. He said the stock price is too high. Okay, and that is what sunk the market from 760 all the way down to 683. One single tweet, you can see the volume spike after he tweeted, and people just sold it off. Okay, so this one, it closed weak. You would expect this one to continue its weakness. See, so after earnings, it popped huge. People got squeezed. They had to cover. People took profits. Then it sold off. Okay, huge sell-off going on here. But yeah, Elon doesn't think this is high enough. I mean, it thinks this is too high. Well, you better get out, because it's going to drop even further, right? Because Elon Musk tweets and people listen and they follow his tweets. So where would you want to buy this if you were short? Where would you want to cover? Well, let's take a look. Right here, there's huge support right here at 550 bucks a share. Okay, it's not a dollar amount, it's a range, so around 550, let's see, 530 maybe. Yeah, 530, 550 is a good area of support. So if you were to short it here on the break of this area, it's around 680ish. If you were to short that, the area that you would be looking at to cover, is around a 550 to 530 area. Okay, but yeah, so let's take a look. Yeah, right there. So this thing's probably going to drop back down to 550 area. So if you're short, that's the zone that you should be covering at. Let's take a look at Boeing. This thing's whippy. This thing's been hammered down already. Okay, hammered down. There's a lot of shorts in this one. 2.5% of their float is shorted. So it got sold off with the rest of the market. A lot of red candles, a lot of people, a lot of selling pressure, right? But it's holding strong. Okay, if this thing breaks below 120, it's a short. If it breaks above 150, 160, it's a buy. So you have to wait until it reaches one of these areas before you act on it. It did recently have earnings, and they announced that they had $65 billion in bonds. Company raised $25 billion in debt offering. Okay, so they didn't need any government bailout, so they don't have to give up any ownership. So they raised $25 billion in private offering, and so now they have liquidity to stay alive. So this one, it has a lot of shorts in it. Good news, will pop this thing higher. After earnings, it did pop up, almost hit 150, and then it hovered around, and then it got dragged down with the entire market because, again, it's May. People are going to be selling, and they're going to be entering into gold. So let's take a look at gold. GLD. Oops, GLD. Let's see what gold looks like for the past month here. Alright, gold is holding up. Alright, so here, if you bought gold, you'd be in a profit right here. So it's a nice chart, actually. This is the ABCD pattern. You got the run up, a little bit of a sell-off, and then it trended back up, and it's holding, and then it broke out to new highs after it broke above 155. So now it's a new ABCD pattern. So we have A, B, the sell-off, the run up, and it's holding steady. So that's it.